Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All righty. Good morning.
Yes, sir.
Good
morning.
afternoon. Good day, whatever it is. Well, I just got back from Mexico on a trip to Punta Mita, and boy, there was some Punta tequila going on there, and I got a little bit fried. My lip got burnt. My lip's twice the size that it normally is. I'm like, I don't know, was my lip sticking out in the sun all weekend or something? Who knows?
Your lips were closer to the equator, maybe.
That's probably what it was. Amazing. Wow. I got to tell you something. A lot of things happened. I was only gone from Wednesday to Sunday. A lot of things happened in the market. It's like I leave town and all this stuff goes on. However, there's good news and there's indifferent news, but there's really no bad news, right? So I want to talk a little bit about what, just real quickly, what's going on in the market. So I want to bring up this bond market screen here real quick for you to see it. Can you see this? So this is the direction that things have gone in just in the last couple of weeks. This is what we've been waiting for. Now, over here was September 16th. That's when the Fed dropped the first Fed rate, right? But we can see now, you've taken over there. You can see that on the 16th is when the Fed dropped its rate, and we want bonds to go up, but you see what happened. They got worse and worse. Now we're on a trajectory, but this could be a resistance point right here once we hit this. So
gotcha.
It's a good time if you are thinking about potentially locking a rate in. Say you're going to close in the next 2 weeks, probably a good idea to take advantage of the gains that you've already had. If you're not closing for another 30, 45 days, you may, if you got the fortitude, you might be able to float it out a little bit longer, and we could see what happens. Because if we break through that ceiling of resistance, rates could get a lot better. I just don't know how much that's going to hold back, but we've passed the 200, the 100, the 50, and the 25-day moving average. We're way north of it right now, which is really good signs.
So I've got a couple of buyers that are getting ready to close, right? So if they're like a week or two away, they should be locked. But if they're 45 days away or 30 days away, they might, if they feel comfortable, they might want to float it out.
I call it cautiously floating. Okay. You know that no one has a crystal ball. We don't know. The market could turn around right now and go the opposite direction, or it could turn around and the bond market could rally. No one knows.
Sure.
All the indicators are cautiously floating.
Right. So, I got you. Yeah, that makes some sense. And let's be honest, most of that float, you're going to be looking at maybe a quarter point or so.
If you're lucky.
And, at the end of the day, while it's certainly impactful, it shouldn't be the reason you're buying or not buying. So
good point.
Yeah.
That brings up the psychology of a client buying real estate. So it's interesting because you and I both have a client. I've got the buy side of it. So I'm helping them to buy a home. They're a repeat customer of mine. Yep. You listed their home.
Correct.
And their purchase that I'm doing was contingent upon the sale of that home. You found a buyer for it.
That's right.
How close to full price was that offer?
We got full price. That full price was a little higher than I told them to expect to sell at.
And so that's got to make the buyer. So this new house that they're buying is like their dream home. So they went from $400,000 to $800 and something $1,000 house.
Yeah, it's double. It's worth double what their existing house is, and it's beautiful. It's absolutely gorgeous. It's definitely their dream home. They sought that home out and then decided to sell, right? So they weren't like actively trying to find another place. And so it's interesting because, when we when we got that offer, there was a little bit of pushback of like, and it took about a week. It took about 10 days to get the offer. It was the only offer that we got. And they were like, you think we could get more?
Oh
And
boy.
I'm like, guys, you got full price, no concessions, no closing cost help, no nothing, just a full price offer, clean. Yeah, just
And yet the one of them who was almost in tears that she finally found the dream home of her life. Now
correct.
she could potentially be playing hardball with a buyer of her property. And if that deal fell apart, the whole thing falls apart.
The whole thing falls apart. That's right. And so, fortunately, cooler heads prevailed, and we settled in at accepting a full price offer, and it looks like we're going to be moving forward. So that's a good story, but it does show, to your point, it does show you the psychology of this thing. It's there's so much emotion wrapped up in these
Well, and you
decisions.
can't be greedy right now. Sellers need to be realistic about what's going on in the market. We have more inventory from December to January's inventory. This is not February's inventory, but December to January, we gained 1,116 homes in the Central Florida market. That's single family homes, not condos, single
Right.
family.
And to put that
That
into perspective, that's about a 10% increase in 1 month.
incredible. So we went from a balanced market to really a buyer's market, and that puts sellers on their heels. So you can't get greedy right now, sellers. If you got a
Absolutely.
buyer and it's a decent deal, don't get greedy. You chase them away. They got a 1,000 more properties to choose from.
Yeah, for sure. As a matter of fact, we did an open house this weekend at another listing that we just went live at, and to show you a little more about the psychology of buying and selling, right? These folks were they were wrestling with whether selling their house that they have a 3.5% rate on and buying a same priced home. They're looking to just relocate area for convenience and life, right? Lifestyle. They want to move, and they're like, we need to figure out if this is a good financial decision. And I said, it is absolutely, I assure you, it is not a good financial decision to move. You need to figure out if it's a good decision, regardless of the finances.
So I know this client, and I can
Yep.
tell you that if economically, at least at the present moment, it wouldn't make sense. It wouldn't be like, would this be a good investment? However, I also know that it's important to her lifestyle, her convenience to work, all kinds of other things that she
Yeah.
just needs to get out of that area. So financially, maybe not today, but I think ultimately it'll catch up. But she was changing
Like,
her lifestyle.
yeah, I mean, listen, of course, the value in your home is very important. The monthly costs of your home are very important, but your life and your sanity is as or more important. It's not less important, no matter what,
It
right?
absolutely is very important. And then therefore, when we're helping, and I'm going to tell anybody that's listening to this, real estate agents, people looking to buy or sell, loan officers, how many realtors do you know that would tell their client, honestly, it's not a wise financial decision, but the decision is yours because it meets your lifestyle? That's being honest and truthful with your client. And I don't think a lot of people get that. I do that all the time on refinances. I'm like, I don't really think it makes a lot of sense right now. Yes, I can drop your payment. Yes, I can lower your rate a little bit, but let's do the numbers. That's when you know you truly have a trusted advisor. And that's what they get with Tom McNamara. That's for sure.
Well, and for sure with Bruce as well. So,
Well, that's what
Bruce,
we're here for. I don't want a client to look back and go, that greedy loan officer talked me into doing a loan when I really shouldn't have.
for
That
sure.
doesn't do anybody any good in the long run. And my business needs to be sustainable.
Absolutely. It needs to be sustainable, and you need to be able to sleep at night knowing that you helped people, right?
Absolutely. So
Yeah.
listen, if you're a seller, you're going to have to get realistic because you got a lot more competition. If you're a buyer, now is a great time to buy. Interest rates have improved a little bit, not a
Uh-huh.
lot, but a little bit. They're going in the right direction. Don't get greedy on interest rates right now. I had a client call me up just this morning and saying, hey, look, can I do a cash out refinance on an investment property and get into the low 6s or 5s? I'm like, no, you can't. Is it worth it? Yes, because he's buying a $200,000 vacation home on a lake for $100,000. Does it make financial sense? It makes a lot of financial sense.
Sure, absolutely. Yeah. So that's where rate becomes a whole lot less important. Hey, listen, man, I know people paying 10 and 12% on hard money loans for very short term, not because they want to, but because it makes sense.
It makes sense. And by the way, if that is you, you're a flipper, you need some help with that, Tom and I would be more than happy to look at your transaction. We do invest. We help other realtors, other buyers, flippers, investors. We do it ourselves, and we can help you as well. If you'd like to learn how to do it and what we do, we'll even share our secrets with you. How about that?
I have no secrets.
I have no secrets, right? I tell them, it's funny. I'll have people come to me like, Bruce, how do you do so much production? Well, I do this, and this. Well, that seems like a lot of work. Yeah, it's a lot of work. It's a lot of work to be a big producer. It's not easy. It's not for the faint of heart.
No, for sure. Well, Bruce, hey, listen, speaking of a lot of work, I've got a lot
to do. Hey, listen, God bless. Thank you for everything. I look forward to our closings we got coming up. Anybody out there has questions for Tom or I, feel free to reach out. We're always here to help you. Have a great week.
You too, Bruce.